Hello investors, welcome to Business Learnings. I had been quite busy again for the past few weeks. So this week we will talk about Avenue Supermarts, Dmart, one of the favorite stocks of investors since the time it got listed. This video is divided in three parts. First we'll talk about the past, then we will talk about the present, and then in the later stage we'll talk about the future. How can we see Avenue Supermarts going forward from this point in time? So past, everyone knows. I do not have to talk about Radhakishan Damani and the way that he has managed the company, the corporate governance, results, everything is right in front of the eyes. The excellent PAT growth, the excellent revenue growth, the excellent margins growth, and I'm pretty sure if you have been watching my videos, you are also aware the reasons why Dmart is such a success. I'll just repeat it. There are two major factors. First is they are able to bargain well with their vendors, and that's why they are able to bargain well with their vendors, because they pay their vendors in just a week, 7 to 9 days at max, and that's why the vendors give them discounts. These discounts which other stores, other supermarket chains do not get. So this is reason number one. Reason number two is Dmart has quite so all the stores of Dmart, most of these stores, they are owned by Dmart itself, as compared to other supermarket chains which actually take those store spaces on lease or they take them on rent. So that's why the margins for Dmart improves. Now the first point, the better they are able to bargain with vendors, the lower the price they are able to offer, and they also the margins that they end up saving because of having their own space, they end up passing all these benefits to the end consumer, and that's why they are able to offer prices way beyond the MRP, prices way less than the MRP, and that sort of prices you do not find anywhere else, even on the online stores. Right, so this is the success story of Dmart. Now what happened during coronavirus? The stock did take some hit, but it has recovered quite well, I would say. I think the all-time high was about 2500, right? And it's currently trading at approximately 2300, 2400 levels, so not much hit. The stock has been growing at 30-40% in the past few years. What are the prospects? I know what is concerning you guys. If any one of you have been to a Dmart store, you must be aware of the kind of crowd that you see there. I was in Hyderabad and I had visited one of the Dmart stores. I saw a huge crowd. I have been to Reliance Retail, I have been to More Supermarket, I have been to Reliance's stores, but I didn't find any such crowd in all those kinds of stores. This crowd is because Dmart is offering the price is way less than the MRP, and this is the reason that Dmart is suffering as of today because of the social distancing norms. A lot of people cannot get into the stores. There are restrictions on them. Dmart has also borne costs in terms of sanitization. The people who were working during the lockdown, they were paid extra allowances, frontline allowances, because they are working right at the front, taking such a huge risks on their lives. So yes, this is going to be a problem. Next thing, so this was about present. How the things are going to evolve in the future, we'll talk about that. If you have been observing the market closely, you must be aware that going forward, e-commerce is going to be a major player, right? Most of the orders will be fulfilled by e-commerce, because a lot of people like us, they will simply not take risks of going to an overcrowded stores, right? And that is the reason, that is the kind of risk that Dmart is facing. Why is this such a huge risk? This is a huge risk because Dmart is not a technology first company. It's a brick and mortar, it's a traditional business, and because of that, it's as it has also stated in its last management discussion, that it is going to be it is planning to stay on that route, staying as a brick and mortar store. During this coronavirus crisis, they also started delivering on wheels, delivering groceries and other essentials to your homes. But that was only a temporary thing. That is not their prime focus. They are still going to be a brick and mortar first kind of a company. And that is what concerns me a lot. People will not visit supermarkets in the number they used to visit during the pre-COVID situations. And that is a point of concern for Dmart. Now, several positive and negative things I'd like to talk about. I have already talked about the costs, how they have increased the employee costs as well as the sanitization costs. I have not talked about the shelf life. So Dmart is known for turning over the inventory faster and faster. 15 or 16 times they sell off the entire inventory in just 1 year, which means the products that they sell, they have smaller shelf life, and that's why there is a huge risk of expiry. Currently, Dmart has about 2,000 crore worth of inventory, and good thing is that the lockdown has been lifted, and that's why this is not going to hurt as much as it would have hurt if the lockdown would have been extended. But this is again some concern, because some of the products have expired. There will be some losses there. Okay, next is I want to talk about the consolidation. So during this coronavirus crisis, a lot of companies which have huge debts, they have to pay interests no matter what. Even if their revenues are falling, they still have to pay the same amount of interest that they used to pay, and that is what hitting them. For Dmart's case, they had a debt of about 700 crores a year ago. Currently they have a debt of about 200 crore, and they have net cash more than they have about 230 crore rupees of net cash with them. So a cash positive company, so debt is not an issue. The problem will be with some unorganized players, with some smaller stores which still have to pay the debt, but their revenues are falling and they do not have enough cash, and that is the place where we might see some consolidation happening. Dmart acquiring some stores and smaller stores being acquired by bigger stores which have stable business. So yes, that is a positive news for Dmart. Third thing that I already talked about is technology. Dmart is not a technology first company, and that is a huge concern, because going forward technology is going to be the center of all the businesses, and Dmart is going to struggle in that front, and this is what I feel. Jio has launched JioMart. With Facebook's investments, its technology front is almost clear that it will be able to handle, it will be able to align itself well with the technology. So yes, that is that. Okay, I have not talked about the apparel part. So if you look at the contribution of different revenue streams of Dmart, about 30% of its revenues come from apparel, clothing and all, shoes, etc. Why is this a problem? This is a problem because clothing is a high margin business, and while it's a high margin business, it's difficult to sell it as fast as you could sell a grocery item, and that's why these apparel stocks, they have been lying there for quite some time. Dmart is not being able to sell, and margins there is definitely going to take a hit, a negative thing here. So point of concern. Now yes, about the corporate governance, I don't think I need to tell anything about it. 75% promoter holding, Radhakishan Damani, 17% of institutional holding, just 8% in 8% among the people, the retail investors like us, which means that institutional investors are heavily bullish on this stock. The concern here is its high PE ratio, more than 100 of PE. Is it worth paying that much price to buy this stock? That's a question that you will have to think, you will have to understand. My perception is, personally, I think that Dmart is still very good for long term because of no competition. No other company can offer the price levels at which Dmart is selling its products at, and that's why as the number of stores keep on increasing, Dmart will keep on adding more and more revenue, keep on adding more and more profit, and it will keep on passing those benefits to the end consumer, which will further push down the price at which Dmart sells these products. And that's why I'm still bullish on Dmart on a long-term basis. Disclaimer, I do hold some stocks of Dmart, and again a point here is, please do not do trading or investment based on my opinion. Do your own research or consult your financial advisor. I'm not a SEBI registered financial advisor. Okay, so I think we have covered everything about Dmart. We have talked about positive things as well as negative things. The major negative thing is social distancing norms and how people evolve with it, and how is Dmart going to align itself with technology is the most biggest point of concern. The positive thing is strong corporate governance, strong history, strong numbers, everything else is quite strong. Now you are to decide if you want to buy or you want to sell, or you just want to hold on. Thanks a lot for watching. This was a long video. See you the next time I'm free with we'll analyze some other stock. Till then, bye.